Abhishek is the CMO of Edelweiss Tokio Life Insurance. It's an interesting company because it's growing way faster than the industry average as far as category growth is concerned. Now, what they've been able to do an amazing job at is get a great persistency ratio. It's taken a lot of effort and technology interventions to get there, of course. And the other part that I found particularly fascinating is their ability to divide all of India into pretty much 4 psychographic segments. And it turns out that's actually a pretty even division. And this is where terms like elephants and deers appear in consumer persona conversation and insurance industry. So quite fascinating to understand how they look at that world. And also very interesting to know that a substantial part of the business actually gets driven by distributors. Is the nature of the industry, it's a push-driven business. So the distributors play a substantial role in influencing purchases. How does a company then build a direct relationship with consumers and how do you build great relationship with distributors are both very interesting insights that I saw Abhishek giving. Hear him out. Thank you so much for doing this, Abhishek.
Thank you. Thank you, Ankur. Thank you for having me on the show.
Great to have you here. I think I would love to start the conversation just a little bit about your personal journey, Abhishek. How did you end up being where you are? So just tell us a little bit about your journey.
Ankur, I've been with Edelweiss Group. This is my 9th year, very soon to move into 10th year. First of all, the journey has been fantastic. I have been out of these 10 years, you can equally split it between heading the life insurance marketing and before that, heading the corporate marketing. I have also spent some time with the mobile store, which was the SR Group company, which was the India's largest handset and accessories retailer.
Sure.
I was the chief marketing officer over there. And before that, I have spent some time with the Bharti Walmart tie-up, which was into opening retail stores which are owned by Bharti Retail and the backend provided by Walmart. So part of that venture. I've also spent some time with ICICI Bank where I have sold home loans, being hardcore sales, and that
Sure.
was close to 5-6 years. And beginning of my career was a company called Shoppers Stop Limited. So
course.
one thing I say is the company that I started my career with, which was Shoppers Stop Limited, and the company that I'm currently with, the Edelweiss Group. These two companies extremely close to my heart.
Of course.
I'm extremely passionate about these two companies, so much so that sometimes I have a fight with my wife because I would not shop anywhere else if I have to shop for apparel or lifestyle products.
That's some loyalty.
It has to go to Shopper Stop. So
Very interesting, Abhishek. So, would be super helpful if you just set the landscape of the insurance industry. Let's just focus on life because that's what you're doing. You're a marketer, you've been a salesperson, you've sold loans before. But now from a marketing lens, you were just talking to me about how the category has its position in India now. COVID changed a few things, but not a lot. So let's just put that landscape together.
So overall, if I see the life insurance industry has right now about 27 players.
Okay.
It is an industry where there is an extreme example of polarization that we can see. Almost out of these 27 players, almost 50% of the market is with one single player.
Right. Of
Okay,
course.
and that single player, of course, LIC.
Everybody
okay?
knows.
The industry is synonymous with LIC.
Sure.
So it's an industry where 50% market share is with one player. And the entire other part of the industry is called as private life insurance industry. So LIC and private life insurance industry.
1 and 26.
Yes. Out of the entire share available to private life insurance industry, the top 3 players, SBI Life, HDFC Life, and ICICI Pru, take away almost 50% of that market.
Okay.
Okay. Now you do the math.
Yep. So we're left with 25% between 24 people.
Between 24
Okay.
players. And then you have the second level of large players, which is Bajaj Allianz, Max Life, Tata AIA. So even the 25% which is left, the lion's share goes to these 3-4 players. So I leave it to you and the viewers and the listeners to decide what is the market share available to each of the smaller players.
Sure. But India's 100.
But that is what I was going to say. That
Yeah.
even at that level, even at that market share, the market potential is huge. The demographics of the country work very favorably for our category. This coupled with the fact that the disposable incomes are increasing, the younger population is earning more and more. And more important part is the savings are getting financialized.
Okay.
Because earlier savings used to be either in real estate or in bank FDs.
Or perhaps gold.
Yeah. Now what is happening is gradually people are exploring alternate ways of financializing their savings.
Fair.
So therefore, we see how we are seeing mutual funds, how they are growing. We are seeing the number of SIPs, they are increasing every month. Insurance or life insurance, what we believe is the basics of financial planning.
Sure.
Because first you take care of your protection needs, and then you move into your savings needs, and then you move into your investment needs, and then you
Fair
move
enough.
into wealth management kind of. That's the hierarchy. So insurance comes at the base of the financial planning, but that is the protection part. What insurance also offers is a way to create long-term wealth through products which offer a blend of guaranteed and non-guaranteed plays. And obviously, insurance also gives an opportunity to participate in the market
Got
through
it.
ULIPs. Yes, all of these products obviously come with an insurance element
Yeah.
to it. So a lot of customers' investments have started moving into these new financial products.
Got it.
So coupled with all of these, if you see, there is a tremendous potential for the industry. And therefore, we believe that there is enough room to grow. To give
You've
you
been
a
at it.
counter example,
Hmm.
a small country like Thailand, okay,
Right.
will have close to 40, 45 life insurance.
Okay. And they're all thriving, surviving.
They
been
are all
around.
thriving, surviving, making money,
Okay.
and actually doing great for the country. So
Interesting.
I think we still have a room for more players in the industry.
I'm going to ask you a very classic marketer question. You could either differentiate from a market segment lens, okay, this is the set of people we were going after because there is, let's say, different spaces available for different people, or a different need or a different positioning or a different service level. What is it that you're kind of going after?
So one thing very clear, and since I've given you the industry ka overall picture, and we are a challenger brand.
Sure.
Although if I coil Mal's hand on heart, probably challenger maybe challenger honge, so we
Of
will
course.
be that kind of a
Yeah.
player currently. Consciously, we have decided that we will not go into the markets or we will not go after the segments where I have to create a need for insurance.
People already know insurance,
So
have
we will
bought
go
insurance.
after people, we will target people who already have a fair bit of understanding of insurance, have a fair bit of disposable income available to them, and in geographies where insurance penetration is already at a little higher rate. For that, cutoff is 20% for us.
So in some sense, you don't want to be the first policy somebody buys.
You might be the first policy
There could be.
somebody buys, but you need to be a person who understands insurance.
Fair enough.
Yes. So that is the kind of
So
market
you'll not
we
do a
will
lot
go
of
after.
category creation, so to speak, because there's enough 75% market share with somebody who will do it.
Actually, it's the other way around.
Yeah.
If I decide to focus on category creation, and that is the basic principle in category creation, if you just try to create a category in a category which already exists, then the benefit will always go to the top players.
That's right? So
Yeah.
the more people buy insurance, 75% of them will buy with somebody
Yeah,
else.
so if I go to a market and try to create a master, probably people will start getting warming up
Sensitive.
to the idea of buying insurance, but then
They'll
they'll
go
first
somewhere
go to the
else.
large
So in
players.
some sense, the market share situation, this is a static situation that as of now, what it looks like. But I'm sure on the incremental basis of whatever new policies are getting sold on an yearly basis, these numbers might look different because you're growing at a certain
Oh,
pace.
yeah, we are growing. In fact, we are growing faster than the industry.
Absolutely.
Our CAGR, if I see since our inception, we are a 14-year-old company,
Right.
has been close to 45% when the market has grown by 10-12%. So that has been
Awesome.
our
So you've been
growth.
consistently gaining market share.
We have been gaining market share, but gaining market share in a qualitative.
Sure.
Because it's very easy for me to go out and sell policies to the customers, but ultimately we sell a product which lasts with the consumer for 10-20 years. I need to ensure that the consumer keeps on coming back and paying me every year. If I'm able to retain a healthy, what we call as a persistency,
Right.
which is the number of customers who are coming back and paying every year, I see that as a quality business.
So you've been at it for the last 5 years. The insurance business has been around for a little longer. So from that lens of persistency as a key metric of judging the quality of what you've got, how does that, let's say, affect your operational strategy on also from marketer's lens? Because there is a certain amount of energy you want to put in making sure there is persistence. And obviously, you have to keep selling new insurance as well. How do you split these two worlds?
What we try to do is, number one is there are 2-3 metrics for persistency that we track. The first metric is the 13th month persistency. The reason we call it the 13th month is because the consumer buys the policy for a year, and every year the policy needs to be renewed.
Sure.
You might decide to renew in quarterly mode or in semi-annually mode or an annually mode, but still it's a policy year.
Sure.
So the way industries or the company's health is measured is 13th month persistency when you renew it for the second year. Then the next metric is a 25th month persistency. Then 37th, and then we go to 50th month persistency, which is
50th.
49th.
49th, sure.
Yeah.
So every year,
and then 65th.
there's a chance of leakage.
If the customer has sustained with the policy for 3-4 years, more or less the
sticking around.
customer will continue the
Are
policy.
you able to tell us what that looks like in terms of
I
first
cannot
year
tell you the
exits?
numbers.
Ballparks, indicatively.
So typically a good persistency number would be north of 80%.
And would the industry benchmark would be somewhere there?
Around that. Industry has been fairly. So most of the industry circulates between 80 to 85% of the 13th month persistency.
Fair enough. So all of this market share battle that will happen, do they happen at the first level or people move around all the time?
It happens at what we call as the first year premium. The first
Okay.
year, the first time you're acquiring a customer, the entire battle is played over there.
Sure.
The health of the industry, in terms of the growth of the industry, is always measured in new year premium. In that particular year, what are the new customers you have enrolled and what is the value of their premium?
So for marketer's attention span, that's kind of where you're...
For our attention span, we call it APE, annualized premium equivalent. That is the holy
key metric.
That is the key metric that we focus, other than obviously the quality parameters.
It's very interesting. So, on the one side, you have this whole persistency situation where there is leakage and people getting into other... what happens? Do they just stop paying one guy and they start paying another guy by buying a new insurance? Or they go out of the insurance fold altogether? They would stay in the insurance fold.
Two reasons. Number one is this person who's currently bought policy from one of the companies. Somebody else has approached this person and convinced this person that the policy that you bought was not very adequate or was not the right product for you. Why don't you buy my policy? So whatever money you're putting over there, start putting in over here, and they are able to convince the customer. That's the So that's probably the when customer actually moves around within the players in the industry, but still is within the category.
It's covered.
Yeah. Second situation when happens when the customer has a financial problem. Okay. Insurance still you need to pay a premium. Yeah. And because of the financial problems, you have immediate pressing needs. And insurance suddenly is something that, what is insurance? Ultimately, it's a piece of paper. That I as a life insurer has given you as a customer, saying that if something happens to you, I'll take care. So that promise, while yes, it is very important, but for customers in immediate pressing financial need, they say, okay, let me put this on the side and let go. So these kind of customers actually lapse due to their own financial situation. And third kind of lapsation purely happens when consumers forget to pay. They don't realize because they would have also many times insurance is bought out of obligation.
Oh, okay. So my relationship manager needs his targets to be met.
No, it is not so much of obligation. Then it is not so much of obligation. It is my relative who has become an insurance agent. And relative comes to me and said, please, ye policy le lijiye, ye wo. I end up buying from that. And, it is very interesting point. Whenever a new person comes and becomes an insurance advisor, we call it the circles. Okay. The first port of call or the first circle is always the natural circle where this person will go to his friends, family, acquaintances, and relatives and start selling insurance. Okay. And most of these people who are buying, this is obligation buying.
They lapse.
And most of these policies, if not sold properly, if not serviced properly, they will lapse. The problem starts coming for this guy when he starts moving out of his natural circle. So initially this person realizes that yaar insurance बेचना तो easy है. Okay. Then the natural circle gets over. That's when the real selling comes in. You have to find customers, you have to convince them, and you have to convert them.
And you see this in data and you see this in patterns and you know this is an obligation. I mean, when he bought for the first time, you kind of know that this is an obligation.
No, it's actually now, it's very difficult. It's very difficult to find out whether it was an obligation sale or not. Unless and until you have a data capture mechanism in place where we are able to track it as an obligation selling. So what we try to do is, we try to do it the other way. We look at the first few policies of every advisor.
Yeah, that's right. So there's a fair proxy.
Every advisor who comes in, and then we try to say these are obligatory customers. Then we have, I'm sure we'll talk about it later. We have our models running, analytics and machine learning models, which actually give us which customers have a propensity to lapse. The moment we have that code of the customer, we go after them on a dedicated basis, be in touch with them so that they keep on paying.
So automatically this so-called proxy to obligation is new bias to the first time advisor. And then those guys get a slightly different treatment. As a
more rigorous follow-up from
more rigorous because you don't want them to lapse. Will they lapse regardless? I mean, obviously there's a percentage, of course. There's a percentage always.
Or it is quite also happens is, there is also a huge attrition in the industry.
So the advisors.
The advisor moves on to the next company and he says, okay, wo jane to, ye nahi aap to. So it's the next level of obligation now.
Got it. So in one lens, you had all of these potentially lapsing kind of folks, and then you had different ways of finding out if they'll potentially lapse, and then these models which are helping let's say, prevent that lapse by being more aggressive, more rigorous about the follow through. You talk about some of these examples of, let's say, what would it mean if you know that this guy has a higher propensity to lapse? What would you do differently?
So number one is if we realize that this customer has a high propensity to lapse, we'll get in touch with the customer, trying to explain the policy properly to the customer. In insurance, especially in savings product, if you do not remain invested over a certain period of time, you'll end up losing money.
And if you keep lapsing and renewing, then obviously that's what will happen.
Yeah. So therefore, if we have to educate customer that you have taken a good product, however, to take the full benefits of this product, you need to be with this product for this much number of time minimum. Otherwise, you'll end up losing money and it will be a huge loss to you. That is number one. Second is obviously it is not just about the money, it is the protection cover which is available to the customer. Educate the customer about the protection cover. Third thing is you tell customers that, and suppose the advisor has lapsed, you tell customer that your advisor was not the only contact point for you with the company. So we have something called as mechanism in place where for the customers whose advisor has left the organization, we had then allowed them to another set of advisors. So these advisors then get in touch
those
with
guys will have the first port of call to get the relationship sort of restored with the company, because their incentive structure would be to sell new policies. But this guy is on his 6th month and now his advisors left.
Yeah.
So now there are 5 months to go before a renewal will happen. How
Yes.
does it get dealt with?
So what happens is the another advisor who's coming in is also dependent on getting new business. But what we also realize is, and that's where some data helps us, that whenever a customer buys a policy, and I was talking about upgrading the
Sure.
policy as well, a customer typically in his or lifetime would end up buying 6-7 life insurance policies. So for the new advisor, it is an opportunity to get more share of wallet from this customer.
So you
However,
maintain this and get more.
yeah, however, this advisor also gets measured on the number of customers that has been allotted to him, which were not his earlier, his or her earlier, and what has been the persistency of those customers.
So in terms of his incentive structure, his alignment to that goal,
Yes,
it works
has
out.
to be there.
But tell
yes.
me something, these 6 policies that you spoke about somebody buying, these are usually upgrades,
No, these are not
cover,
upgrades. These are
cover
not
expansion
upgrades.
sorts?
So unfortunately, there are not many products in the industry which are available, which you can upgrade your existing policy.
Sure. So additional.
So you have to buy additional policies. So most of these policies are a new policy that the customer ends up
And
buying.
in some sense, is this usually spread across multiple providers, or
Oh
is there
yes,
a
yes. These are spread
reason
across
solid?
multiple providers. Most of the customer, 2 to 3 providers have 6-7 policies. Most of
And that's because people want to, let's say, somewhere de-risk or hedge because of
No,
whatever, or what is the reason why you do this?
it is who has got in touch with the customer.
Okay.
See, I'll tell you, sometimes I actually think that these are so basics, and therefore I, as a marketer, I'm a huge proponent of going back to basics.
Sure.
Insurance is a game of basics. It is a game of relationship management.
Okay.
I am an advisor. You are my customer. If I am maintaining continuous contact with you throughout the policy term, you will not buy from anyone else. It is basics. It is basics. Whoever approaches you, why? Because I have been in touch with you. And the people who have been into the industry as an advisors for a long time, they understand. They understand this, and therefore they guard their existing customers. They will do everything. They will go to their family functions. They will become part of the family. If you see in olden times, you are fairly young, but when I started working, my first insurance policy was bought through an uncle in our home. He used to come, and because he sold policy to my father, to my mother, to my brother, to my sister, through him, there was no questions asked.
Because he's supposed to be the trusted
अंकल ने
advisor.
बोला है ये पॉलिसी लेनी है तो लेनी है मुझे आज वो तो इंडस्ट्री में आने के बाद I read those policies and understood what I bought. And there is also an emotional element. So I will lapse all other policies. I will
But
not
not
lapse
his.
that.
Yeah, of
Because
course
why?
you don't
That
want him-
father, my father bought it for me. And if you are able to maintain that relationship with the customer will not go anywhere.
So
Problem
clear
comes
with
these
you.
advisors, not these people who new come into the business. They do not understand this.
Hmm.
What they don't realize is that retention business over a period of 5-6
Will come out
years
much better.
becomes so huge, and you don't have to do anything. Anything.
I
You
can
have to
imagine.
just be in touch
Just
with
be
the
in touch.
customer, wish the customer on anniversary, birthdays, or any milestones, service the customer, and that's a income for life for that advisor.
I'm a little curious about this whole typical advisor's life journey within an insurance company, across insurance companies, so the kind of portfolio he handles, the kind of portfolio he's able to take along with him versus what he has to leave behind. Let's just get into the head or the life of an advisor for a moment. And Typically, when he takes a job the first time with an insurance company, how many years does he spend there?
Let's talk about some current data.
Sure.
And I'm give the industry data. Don't be surprised if
Of course.
the
Yeah,
attrition
I'm
rate.
hoping I won't be.
The attrition rate in advisors
Hmm.
is upward of 80%.
80%. And this
80.
is what kind of time frame? Annually.
First 12.
Wow. The first time people become advisors, and within 12 months, they'll switch to another company.
They will switch to the industry. They'll switch off to the
they'll
company.
switch to the other
Most
industry
of them switch off from the industry.
because it's too hard.
Because it is so hard, because within 12 months or within first 5-6
You'll
months, they
finish off
exhaust
your
their natural
relatives,
circle
yeah.
and then they realize it's not so easy. So that
Okay.
is, so what
But
does industry
is that
do?
somewhere coming in the way of their expansion then? I mean, for
Industry's
companies.
expansion?
Yeah.
No, number one is, I think there are enough opportunities available because of enough population which is eligible for working. There's enough
So
people.
that supply is
available.
around top. Okay.
Supply is not a
this-
problem, but what is happening is there's a tremendous competition for that supply.
Okay. Oh,
So
in
what
terms of
the
the
industry-
24 insurance companies wanting those advisors, is it?
Everybody talks about how difficult it is to get an insurer, how
Sure.
difficult it is to get a customer. My belief is it is equally difficult to get a distributor.
And I'm going to zoom into a lot of this very,
Yes.
very quickly. But while we were talking about the life of a distributor, and that's an interesting piece that 80% of them will join in the first year. Let's just double click further on how many people does he end up selling to before he goes. What is his normal steady state? People who stick around, how many people do they manage in the portfolio?
So the people who stick around, there's one gold standard in the industry, which is called as MDRT,
Okay.
$1 million roundtable.
Okay.
Okay. Now, $1 million roundtable is an industry body. It's a global body. It is only open to life insurance advisors across the world. You can become a member of MDRT only if you do a certain amount of business in the calendar year, Jan to December.
Okay.
And they have different standards for each country depending upon the purchasing power parity of that country. In India, if I'm not wrong, that business is around 30 lakhs of premium in one
Okay.
calendar year. So you get the benchmark. If you're doing 30 lakhs of premium collection
In 1 year.
in 1 year, you are the cream of cream.
Okay. Really? Is that hard?
Yeah. And therefore, how do I define that cream of cream is 0.1% of the industry.
But if it's making 30 lakhs of premium, how much is he making as an income? Is his income?
Depending upon product to product, different category, you can take, and don't quote me, don't
Yeah,
hold me
we
by
get a
this
ballpark,
number,
of course.
25%.
But then this is not his full-time job then, or is it?
We have
For some
insurance
people might.
advisors that who become its full-time job for them. But these advisors not only do MDRT, they do MDRT multiple
course.
times over.
How many people would he sell to in a year on ballpark? Again, the average order value is what's in the premium
आप
lens.
मोटा मोटा अगर आप 1 लाख रुपए का टिकट पकड़ो तो 30 customers.
So 30
30
customers
customers, that
paying
means
about
2.5
10,000 rupees a
customers
month
a year,
ballpark.
2.5 customers a month.
Yeah, so 2.5 new customers a month kind of adds up. Which
Yeah.
doesn't seem too hard, but it seems hard when you look at
It is hard.
attrition.
It is for us. The industry also runs on what is called as an active agent. You know, how does industry define an active agent?
6 months?
No,
One
somebody who has
customer?
sold one policy in last 12 months.
Wow, okay, that's pretty rare. And is that a large number of agents as well? Of
Oh
that
yeah.
nature?
On an average,
Hobby agents.
of
once
all
a
the
year.
companies, I'm giving the industry figure, 25% of the agents are only active agents. The 75% are inactive agents.
Okay. And in some sense, they get capped out because it doesn't work from the effort reward ratio, so they figure something else in life.
Yes. So let's take an example
Yeah.
of an MDRT guy, 30 lakhs.
Hmm.
मोटा 25% उसको प्रीमियम मिला तो करीब 6 और 7.5-8 लाख रुपए उसके पास आ रहे. Assuming he keeps on doing this for 5 years, 5th year onwards, from the renewals itself, he will earn that much.
Correct.
And in addition to that, and as his renewal portfolio grows, he keeps on making
Correct.
more money. And then what happens is, good advisors, then they just don't relate to that customer. This relationship works on references.
The whole family, the whole friend circle of
Whole
that guy.
family, friend circle. It is like this. If you enter a good relationship advisor or a personal financial advisor, will then get the full wallet share of the full circle of that customer.
But somewhere that's kind of very rare because you said 0.01% of
0.1%.
the whole.
But that's MDRT. I'm not talking about MDRT. You keep on doing consistently 20-25 lakhs.
The 30 lakh figure was more to do with not just new, but also the total premium, right?
No, it's
that's
the
new premium.
New business premium.
Okay, so which means that I would be able to enter that, but from a general personal income lens, my part would end up coming from renewals as well.
Yes.
And what percentage of renewal, let's say premium ends up being my incentive? The first part was 25% for renew. For the other part is?
It depends upon product
Relatively
to product.
smaller,
You
but
can
life
take a
would be-
ballpark figure of 4-5%.
That's still not small, right? If I'm accumulating it even the second, third,
Yes,
fourth year
that is
onward, it
what
can
I'm
start to
saying.
become
What
meaningful.
they don't realize is that this waterfall keeps on increasing.
And especially if I've just, because of the nature of business, you will always have attrition, and some people will inherit a bunch of accounts which will renew under them for pretty much no effort.
Yeah.
So for the next year, that's free income.
That's free income, and more important is, one advantage is getting references from this customer. Second advantage is, as I was talking about earlier, is the financialization of savings.
Sure.
If you're a financial advisor selling insurance, then you can
graduate.
graduate selling other financial products also. Then you don't not only selling life insurance to this customer, you will end up selling mutual funds, you'll end up selling other products. And
You have two lenses to apply. So I would love to get into this whole engagement of advisors as a line of conversation as
Yes.
well. And we'll get to that during the second part of the conversation. For now, I would then double click on, as a company who has millions of insurance buyers who bought it from you, operating at a certain level of persistency, a certain level of payment frequency. From a marketing and technology lens, how do you keep these guys engaged where the persistency stays? And in some sense, the room to sell them the next insurance because they would want to ideally have a relationship which is meaningful instead of going to 3 different companies. How does it work really? Because if it's all push based, then there is only so much you can do. But I'm assuming as a marketer, you also have some elements in your play which help you pull that guy towards you.
Yes. What we have done is we have developed a proprietary tool. We call it U2, which is U Unlimited. It comes from a positioning of the U Unlimited. At a broad level, it is a need analysis tool. At a broad level. So it's an app, but it's an app available for our distributors only. It's not for customers right now. So it is because it is a consultative app. So our distributors sit with the customers, and then they ask 4 or 5 questions in terms of customers' needs and this thing, and then the tool throws out the output that the customer is supposed to buy.
How much insurance do you need?
How much insurance and which
Coverage
product?
Which
See,
product?
we have at least 20-25 products. Which product you should take? But many times what happens is what the tool has recommended that you need to take 2 products. One for this need, one for this need, and therefore the total premium will come to 2 lakh rupees. Suppose.
Say.
Yeah. Now customer says, sorry, I don't have 2 lakh rupees right now because you have to then I have to give this every year. So I can only give you 1 lakh rupees right now. So the tool then will recalibrate the same products in 1 lakh rupees, but it will also tell you, okay, because of this, your this much percentage need is covered, this much is still uncovered.
Fair enough.
Now we have this data available with us that this particular customer has only 74% of the need covered and still 26 is left as of now.
And from a lens of coverage, you have this for all of your customers because a lot of
this tool we have included now.
Okay, so this is recent.
It's an year old. But now for the customers who are onboarding, we have full details of coverage.
What's very interesting is this whole lens of profiling, because I was in a conversation with the gentleman from ET Money, Mr. Santosh Lalwani, and they have a 19-question, let's say, profiling form to talk about your financial profile. Turns out they have an 85% fill rate even from a consumer lens. So it was fairly fascinating for me.
Our experience has been a little different.
Yeah.
When we had a similar form like this, which had so many questions, we decided and we realized that most of the advisors are just filling the default option and moving ahead, which throws your data completely out of gear and you cannot do anything
different categories have different
So we decided to make it much more simpler for customers. Therefore, we decided to ask only 5 questions.
But you don't want to do this directly with consumers because in very simplified terms, the share of insurance policies sold via advisors versus sold directly by company, is that anywhere meaningful? Direct to consumers? Not really.
I'll give you industry figure. More than 90%, close to 92% of sales across the industry happens when there is an intermediary in between.
Fair enough. So obviously,
only in 8%
you will have to live with the fact that this is how it's going to be.
This is how the industry is, and I have learned this as a marketer. I have learned this.
There's no way fighting this battle
because I was initially this thinking, no,
direct to consumer, correct.
Educate customer, direct to consumer. I have learned it halfway that it is the
it's the nature of the category.
It is a distributor. See why? Let's understand why this is a distributor-led category. The products are perceived to be complex, and I'm using the word perceived with an underline.
Sure.
Because the products are not complex.
Okay.
But they are perceived to be complex.
I would struggle to make the difference.
Yeah, but we are perceived to be complex because of the jargon that we use. Most of the jargons sometimes we have to use because of the regulatory requirements. Thankfully, our regulator is a fairly, I would say, a regulator which listens to customers, listens to insurers. So regulator is now working with the entire industry to come up with what they call is a simplified document. Okay, currently I have to tell you what is your sum assured, where am I, जैसे मैं 2-3 term में घुसूंगा, people switch off.
Yeah.
So it is perceived to be complex, but if I can explain the product to you, it's very simple.
Fair enough.
And therefore, the need is to convert that perceived complexity to perceived simplicity.
Got it.
For that, I need a distributor. I need a face-to-face interaction. Second is nobody gets up in the morning and says, I want to buy life insurance. It is always a push product.
Yeah.
You will buy insurance only when somebody has got in touch with you or there has been a trigger in life, like a marriage, childbirth, or even a death in the family. You know, I've seen so many realizations at funerals. People get this trigger
Yeah.
of
I should buy
other, and
insurance.
they're attending funeral of other people. They realize कि यार मुझे भी लेना चाहिए. So there are these triggers. So unless and until you have been
In some
contacted, there's a
sense,
trigger.
the best person to deal with those triggers is also the advisor because it's probably his social circle. He knows something has happened. Okay, that's it settled. Do you want to buy insurance?
No, actually, then
No?
the subtlety works best in that
Yeah.
point of time.
Of course, it's settled.
So what we do is, whenever we settle a claim, we make it a point that the advisor goes to the customer's place. पहले तो चेक लेके जाते थे, आजकल तो चेक का जमाना नहीं
Sure,
है,
of course,
it's
it's digital.
direct transfer. Yeah. Normally in these face-to-face interaction, the people from neighborhood and the family and relatives come.
आके ले लेते हैं.
उसके बाद फिर लोगों को मालूम पड़ जाता है कि इसकी वजह से इंश्योरेंस है. It works well for us.
And also, a
But
claim
more
passing
important is to be
a bit of
sensitive
faith.
to the family at that
Of
point
course.
of time. And,
No, I mean, in some sense, the whole claim being passed is also a restoration of faith
oh, yeah.
because I'm assuming there's a certain claim rate that gets passed, and that's I don't know if that industry struggles with that confidence. Or does
No,
it?
actually, no.
It's
You know, I
not?
tell you, the industry now. So the objective of the industry is to pass a claim. And I'm talking about the industry.
Build that faith.
I'm not talking about our
Sure.
company. Our company included. We as an industry now, we want to pass claims.
Hmm.
The only reason when a claim is rejected, and probably one of the only reasons that the claim major reasons the claim get rejected is when the customer has not been truthful on the application. That is the only reason.
Is there a percentage to it?
Huge.
A lot of
See, what
people say
happens is
lies
people try to hide.
because they feel it will
So
get.
even if it's a lifestyle disease, so I have diabetes, right? If I have to take a life insurance, I have to
You
declare
have to
out.
declare diabetes.
What will happen? My insurance premium will go up slightly
To a certain level, yeah.
to a certain level. But if I have been truthful, then no claim gets rejected. No claim gets rejected.
On the other side, if you've not been truthful, then obviously you pay less premium, but it'll be of no use
It will
because
be of no use because when
you'll
the
get
time comes
rejected.
for the claim, and in our industry now, the customers have to realize when the time for claim comes, that customer is not going to bear out.
Of course, yeah.
It's the family.
Yeah, and
It's
they
the
will obviously
family.
hold
And
you.
most of the time, and this is, I think, I think we as an industry, that's an idea that is coming to me from this discussion is we need to spread awareness about informing our family members about the insurance. We have so much cases where the death has happened and the customer is and the claimant is coming to us after 6 months.
You
Why?
have no idea
They had no idea.
that this policy
Going
is
through the papers, they came with a policy document and said, okay.
But isn't that kind of default to have a nominee and then their phone numbers and whatever in that below?
But we need to know as an insurer that the customer has died.
You
We
wouldn't
will
get to
only know when the time for premium payment comes and we realize premium has not come in and we got in touch with the customer.
The customer's phone number also might not remain active at that point.
Yeah.
For all you know.
Yeah.
And his email address is also gone, which means
Yeah.
you
So we know
will
also
need to have a
emails
plan.
have
All the more reason the only way this can happen is the advisor.
is the advisor, and therefore advisor, or if the family is aware, which doesn't happen in India. You know why? Because India is a superstition.
बताना नहीं है.
Insurance की बात, if we start now, most of the time the family members say नहीं.
मरने वाले को.
करना है जो कर लो, बताओ मत हमें. Because
Same thing with the wills, I think,
that
right?
discussion
People
is
don't
not-
like to write wills or at least talk about wills.
Yes, because it is अपशकुन माना जाता है हमारे. Today, in fact, in the morning when I'm coming, we were having a brainstorming discussion about a new product that we are launching, which has an element of insurance for the child as well.
Okay.
And we were brainstorming that is that the feature we want to talk about, that even your child's life is covered.
Okay.
And then we realized probably
Ouch.
I
That's
don't
would
want to
not
talk
be an easy
about it.
conversation.
Matlab, because if I have to talk about it, I have to bring it in conversation.
So, Abhishek, you've spoke about the persistency being a big topic, and it's a fairly healthy number that you're currently at already. Help us understand the key drivers of this persistency and what are you doing to make that happen?
At a crux, what is persistency? Persistency is when a customer who has bought it's like a subscription model.
Right.
Take a Netflix subscription, you renew it every month. Or let's take an example, an Amazon Prime subscription, you renew it every year. Why will you renew it every year? Because in that preceding year, you have seen some value in it. And that's why you want to get value more than the subscription amount that you have paid.
Yeah.
In life insurance, while principally it will work on the same way, but here there is no returns as such. The returns come over a period of time. If it is an investment product or if it is a pure term policy, then it's what you're getting is a cover that is available to you. So for us, the key driver in persistency is number one, has the customer understood the product that it. Many times customers do not understand the product. They just buy it because the advisors tell so. And after that, they forget about it.
Okay.
And therefore, first is number one, to reach out to the customers and try to tell customer that the product that he or she has bought is the right product for you, and ensuring that everything is known to the customer. That's the first and probably the biggest leap.
Okay. And this is very advisor-led in-person education.
This is a mix of advisor-led as well as we reaching out to the customer
Content.
centrally,
Yeah,
which will
okay.
probably not in person, but through phone.
Content
or
distribution.
yes. The second is the relationship that the advisor holds with the customer.
Okay.
Okay. While this becomes important when the policy has been sold by an advisor, almost 50% of the policy is also sold through bank RMs.
Okay.
Industry, if you see, the banker as a channel
Hmm.
contributes close to 52% of sales.
Sure.
Now, bank RMs keeps on changing.
Hmm.
Okay. So therefore, there's no specific advisor here. It's just the bank which has sold. So therefore, it becomes equally more important for the life insurance company to be in touch with the customer, because customer primarily is of the bank. But now we share that customer with the bank, and therefore we have to be in touch with the customer. We
That
do not have an
relationship.
advisor in between.
Okay.
Okay. Second part is as the policy progresses and this thing, there are a lot of good things happen in a policy. In a savings plan, bonus gets added to the policy.
Right.
Additional, if it's a ULIPs, additional units get, depending on the product,
Sure.
additional units get to tell customers that the investment is growing, the investment, this is the purpose that bought it for, and it is progressing. Third thing is always, it is very cliched, but be in touch with the customers on the days which are important to the customer.
Of course.
Okay. Birthdays,
Birthdays,
anniversaries, all of these, and or invent a date like we do as the industry does, is the policy anniversary date.
Of course.
And last part, I would say, is as an organization, we also end up doing a lot of things which are more than the business.
Sure, the purpose
Things which are purpose driven. It is our job as insurers to tell the customers that we have been doing this, and we have, and asking customers to participate.
Fair enough. So I think interesting set of thoughts coming together on the persistency side of things. You also mentioned offline about the fact that you've divided your customer base into a bunch of personas, and I wanted to understand, when you look at India as a market, there is diverse geographies, diverse income groups, diverse cultural groups. How do you break this down to a set of segments which become addressable, because otherwise it's just too overwhelming?
The most easiest way to do it demographically. But when we realize
Assuming you crossed over from there,
India,
right?
it is not possible to do demographically. Every state is like a country. Every state behaves like a different country. So therefore, what we believe is demographically, you can work up to a certain extent, but it will
Only
not.
go so far.
You have to look at this customer at a psychographic level. You have to look at this customer at a mindset level. So a couple of years back, we did a huge study where we reached out to customers from across the geographies, across the mindsets and this thing, because we wanted to understand these customers at their aspiration level, their relationship with money, their relationship with risk, because we're in the business of risk, relationship with the risk, and we want to figure out how to segment it. And so it was a qualitative study backed by a quantitative study, because each segment we also wanted to quantify whether this segment relevant enough, big enough for us to go after it or not. What came out of that study, what we were able to do is the segment customers basis mindsets, but to make it easier for us to understand, number one, and then for as a marketer, for me to propagate it throughout the company and then take it to our advisors, we needed a much simpler and much relatable way to.
Sure.
I cannot say based on archetypes that this is that kind of this thing. So what we did was we classified these customers on the basis of animals.
Okay.
We call the project was also aptly called Project Safari.
Achha.
And we ultimately identified 4 sets. We divided the customer into 4 mindsets. The mindsets were lion, elephant, deer, and hawk. So it's a mix of animals and birds, if you can say, yeah. And each person, each persona had a different character. So let me give you an example.
Yeah.
An elephant is that kind of person who's fairly methodical, who does everything to the T, he thinks in advance, very well planned, that kind of a person. This person is aware of the risks in life and wants to be prepared for the risks, want to cover for the risks, but very sure of himself. What I am doing is right. A lion is a person who probably is an elephant, but he also has that element in him that make me feel important.
Okay.
I will be methodical. I'm willing to take risks. Elephant will not take risks. This person will take risks. But you have to tell him or her that you are the best in the world. What you are doing is right. A hawk is the person who knows what's going to go, but doesn't get too much into detail. This person would like to get specialists and tell them, this is I want, now up to you. Time to time, keep me updated what is happening. I'll keep a hawk's eye, but don't get me into nitty-gritties. As compared to an elephant would like to go into nitty-gritties.
Got it.
And the final one is
Deer.
a deer. Now,
Right.
deer is a person who's the most underconfident.
Okay.
This person says, मैं ठीक कर रहा हूँ कि नहीं, सब ठीक होगा कि नहीं, that kind of mindset. And therefore, the way to deal with all this person is, let me give you this thing through an example. Suppose you are selling a term product. If you are selling the term product to an elephant, it's only facts and figures. आप इतना दोगे, आपके फैमिली को इतना कवर मिलेगा, ये है, this has been our claims ratio, this is the process, this
very
is
objective,
very objective, and
number
this
driven
is
selling.
When you are talking to a lion, you'll say, sir, आप बिल्कुल ठीक कर रहे हैं. ये जो आपने product choose किया ना, this is the best. Like what you have chosen this, like what you have chosen this, like what you have chosen this. You are the
give him
best.
his ego massage and then he's
A little
kind
bit
of
of
more
ego.
manageable.
Same product. You're selling the
Of
same
course,
product to
get
both
it.
of this.
Yeah.
When you're talking to Hawkeye, आपको इतना देना है, इतना मिलेगा. Don't worry, company will manage everything. आपके पास साल में statement आता रहेगा. आपको कोई भी issue है, यहाँ call कर सकते.
बिल्कुल. That's what he needs to know.
That's what he needs. Dear, sir, ठीक product है, ले लीजिए, कुछ नहीं होगा. मैं हूँ ना. I will
He
take
needs a
care
lot
of
of
everything.
reassurance.
That reassurance. So same product, you have to. So this is how we classify it, and this is fantastic. I've never seen any model like that.
You know, I'm very fascinated by this exercise, and I have two questions for you to follow up. One is, are you able to fit everybody into one of these four?
Yes,
by and large.
Yes.
And this means that elephants are found in north and south and east and west. It trespasses cultural boundaries.
It trespasses culturals, and that was the beauty of the study.
That's
it trespasses
amazing, right?
geographies, it trespasses cultures and
genders, age brackets.
Same.
It's all covered.
Absolutely same.
Wow.
And when we did the quantification, most of them were upward of 20%. That means most of them. So India is equally divided into these segments.
That was going to be my next question.
There is no dominant segment.
It turns out we have as many deers as we have elephants.
What happens is anybody who starts the journey starts with a deer.
Okay.
And so over a period of time, as you get better in life, as you see success in life, you either go towards hawk, or you go towards elephant, or you go towards lion.
But I will stay where I end up. In some sense, if I'm a lion now, I'll stay a lion for a while.
It also depends on external conditions.
Sure. Of course.
If your experiments have been good, if what you have done in life has worked for you, then you'll stay a lion. It keeps on reinforcing. But if your decisions have gone wrong, probably you start going back to this thing.
Being a deer. It's very fascinating. So in terms of the third, same question related, that in terms of the input variables that determine this kind of an outcome, was this a lot of, let's say, data that you had which you crunched into these models which gave you this, or was this more of a qualitative originated?
It is completely qualitative, in-length meeting with customers across geographies. The study itself took more than a year for us to do.
But then how do you now map it to the audience?
Yes. So now that question was answered, we are able to segment.
Yeah.
Now if I'm sitting with you right now, how do I know
exactly
whether you're an elephant or whether this thing, I don't know. So what we did is, we developed a 4-pointer questionnaire.
Okay.
And I ask you these 4 questions. Basis these 4 questions, I with 80% probability I'll be able to determine what is the kind of customer you are in.
And these 4 questions ask me what?
Fairly simple.
Achha.
Fairly simple questions that for me money is this. There are 4 questions. It's an algorithm that we have designed.
High quality, high value research, and now suddenly it applies to everything you're doing.
Everything you're doing. Now the problem that we face is convincing the distributor. I go back to distributor and said, आप पहले customer, आप अंकित से मिलने जा रहे हो, पहले ये 4 question. 4 question का output आपको आ गया, मालूम पड़ गया, okay, he's a lion. Same product but change your pitch. Now what happens is, the distributors who have already been into the business for quite some time, they see with this a pinch of salt.
They would rather use their own judgment.
They say, मैं तो ऐसे ही business करता रहा हूँ, ऐसे ही business होगा. So that's the problem that we are facing right now. We are trying to figure out a solution. The second problem that we are facing is, how do I map this into the system so that when a customer is decided to approach us minus his advisor, his or her advisor, how am I able to change my communication according to the persona of the customer? It requires a lot of work. So it is quite possible that, suppose I have to send you a premium reminder.
Right.
Your renewal is coming. Do I change it according to the persona of the customer, or do I make it standard? I don't know right now. That is
At
the
this
question.
point, it will be an experiment to figure this out. But in some sense, the distributor currently is doing his own judgment of what to pitch and how to pitch.
Yeah.
Which you don't necessarily know if it's scientific enough.
That is the best way.
I mean,
we're
that's
trying to
his
bring
best
some
way.
science into this art.
Yeah,
but what we are doing is, we believe we have very good findings and we are able to classify. I am finding challenges in implementing this.
Right.
There are probably not many actionables that are coming out of it. That how do I do it on the ground?
Sure.
I'm trying to figure out a solution. I'm sure we'll figure out a solution.
Hmm.
What we are now doing as an experiment is trying to map it to the district. Because
Okay.
distributor is much more engaged audience with. I have got a
You're
much
saying
more
that this
face
will be
time.
elephants and lions and deers?
I mean, and that is hopeful, wishful thinking right
Right.
now. We will convert and we will use these studies to map out our distributors.
Okay.
Once we know that this kind of distributors, and probably for distributors, the terminology might be a little different.
Might be different.
So let's think of this distributor as a lion.
Hmm.
I know this distributor को कैसे treat करना है.
Sure.
That information would be fed to my sales team and said this information, this distributor treat it like this. Now the problem is my sales team might say मुझे तो मालूम है. Because anecdotally we know,
This is from a
but we need to institutionalize.
people lens. How many salespeople and how many distributors are we talking about? Just order of magnitude wise?
Oh, so as a company we have close to 2,000, 2,200 to 2,300 sales people. And distributors, we have 65,000.
So 1:2x relationship generally? Or is this a hierarchical structure
No, the
as well? Of course.
65,000 is total distributors. The
Hmm.
overall
Active ones would be whatever.
would be the active distributors will be close to 15, 20,000. But these are just the distributors which I'm talking about, the individual agents.
Hmm.
Then we have bank RMs, we have
Of
bank
course.
employees.
Yeah, it's a complex ecosystem. I
It's
can
a
imagine.
huge cost.
You know, because while of course institutionalizing these changes where there is a lot of people involved is a complex task, what I was going to get next to is this whole engagement piece with the distributors itself, because given that it's a substantial, almost 90% plus of your business is coming from there, how do you keep them engaged? Because there is churn of distributors, there is attrition, like you said, and there is engagement, disengagement, incentivization, potential gamification. I don't know if you're allowed to do that, but what is the whole lens around distributor engagement?
Okay. So as I was telling you a little earlier,
Hmm.
probably I'm a little old school in my thought as far as marketing is.
Basics.
I'm a firm believer in insights.
Sure.
Firm believer in insights. That anything you do, first get an insight
Mhm.
and then work around the insight. So we have again spent a lot of time to understanding our distributors as well. What we have understood is because you also have to see distributor from a competitive lens also, because all the insurance companies are after this distributor. So I have to have my offering and that this is much better than most of the industry. So one thing we have understood is commissions, incentives are available with everyone and they are compared.
Sure.
1% इधर होगा 1% उधर होगा.
Correct.
बाकी सब same.
Hmm.
उस पे there is no way I can play the game.
Fair enough.
No way I can play the game. And if I try to play the game, number one is there are regulations that tell you that you can only pay this much to the distributor. So
Hmm.
I cannot win this game on commission. I cannot win this game on what you were talking earlier of
Gamification.
trainings
See.
across the world.
Hmm.
We do a lot of training for them across the world. Suppose 3-4 friends are talking in a group and having a drink and this thing from different profession. And if we ask, what are you doing? What are you doing? The person who's an insurance advisor, I will never say he's an insurance. Never.
Okay. There's no pride in that profession.
There's no pride. He will say,
Okay.
he or she will say, I'm a financial advisor. Yeah, anything.
Got it.
He will never say I'm an insurance agent, because hum log na, we think like that the insurance advisor is if somebody who's selling insurance na, that person probably was not able to do anything in life
Hmm.
and therefore started selling insurance.
Okay.
And therefore there's kind of a stigma attached.
Stigma attached. Hmm.
And these people na know this.
Okay.
These people know this. So what they want is somebody to elevate themselves and their profession in number one is their own eyes,
Hmm.
number two is their family's eyes, and number three is their society's eyes.
Got it.
This is what they want to do. We work on this insight and we put disproportionate effort on this insight. I was telling you about the people who qualify as MDRT.
MDRTs. Hmm.
They're cream of cream, but they still have that kind of a stigma.
Sure.
They're the best in the industry. You talk to them, I'll show you a couple of videos that their stories. There are stories that these people have managed to not just uplift themselves, but uplift their community just by selling insurance.
Sure.
And these people are great. You know, MDRTs, they are a breed apart. Most of the companies, what will do the MDRTs, MDRT बनेंगे तो उनको contest में बुलाएंगे. उनके circle में उनको बहुत elevate, they will be elevated in their own circle.
Right.
This thing. You go one step further.
Hmm.
And we decided that if you qualify for an MDRT, we are going to place one hoarding with your photograph congratulating you in your locality. उस समय this idea was a sales promotion idea कि करके देखते हैं शायद और business कर लेगा.
Right.
Now suddenly this small thing of putting up this person's hoarding with his face and his name and congratulating him and saying something appropriate messaging, this has become such a huge thing for our advisors.
I'm sure.
We have situations where जिस दिन होर्डिंग लगनी होती है, एडवाइजर कम्स विद द एंटायर फैमिली,
फोटो खिंचवाएगा
विद सोसाइटी. फोटो नहीं, पहले नारियल फोड़ते हैं
अच्छा
होर्डिंग के नीचे, एंड देन होर्डिंग के वहां खड़े होकर फोटो, एंड देन दे सर्कुलेट ऑन व्हाट्सएप अक्रॉस ऑल.
ऑफ कोर्स.
एंड व्हेन वी डू अ रिसर्च विद ऑल ऑफ दीस पीपल, दे टेल अस दैट एवरीबody MDRT, and you know, one advisor officially they can work with only one insurance company, but then their wife also takes a license, their kids take a license, so they have interactions with a lot of insurance company. They say हमें MDRT तो हमने 2-3 insurance company में किया हुआ है, but जो इज्जत आप लोगों ने दी है, what you have given, nobody else gives us. So that builds stickiness for us.
Yeah.
Huge, and it's just such a small. And you know, again, going back to basics, where did this idea come from? This idea came from a sales guy.
Okay, उसको local market पे इज्जत दिलवा दी.
उसको वो बोला था कि मेरा, he came with an idea कि उसका फोन आया मेरे पास कि बॉस एक आइडिया है, डिस्कस करो. ये आइडिया है, मुझे मेरठ, एंड आई स्टिल रिमेंबर द सिटी, मेरा मेरठ में ये MDRT है, मुझे उसको वहाँ लगाना है. आर यू ओके विद दैट फ्रॉम अ ब्रांड पर्सपेक्टिव? आई सेड आई एम ओके, बट आई सेड आई लव द आइडिया.
मेरठ में क्यों कर रहा है, खुद ही कर ले.
व्हाई डोंट वी बिल्ड इट इन अ प्रोग्राम? 5 years we are running this program, and
haven't
you
people
should
replicated? Haven't people copied?
No, actually surprised. Why not?
Because I would imagine that this sounds like an amazing idea. People would replicate, and then you'll have to find another way to, because every year you'll have to innovate some way, because it'll get stale at some point, because all ideas have a certain shelf life. Very fascinating nonetheless. But just, okay, fair. So this is like one
I
big
was saying
piece.
making them feel important.
Yeah.
Second is enhance their knowledge. Because these people, when they go to the customers, they project themselves as a financial advisor. They will never say I'm an insurance agent. They're a financial advisor, because customers की need सिर्फ insurance नहीं होती है. Customer की financial need होती है. Insurance, savings, other investment products. So we have to teach them a lot of things. So and that's where the muscle of Edelweiss Group really helps us, because we have authority, we have a name in the financial industry. We are able to teach them a lot of stuff other than insurance as well. So then when they go to the customer, they can speak with authority, they can speak with knowledge. So we invest a lot of our effort, time and money in training them.
But tell me something, Abhishek. In your sense, you're practically a single category product company. You're not a single product company, but single category. Within your competitive ecosystem, there'll be people with multiple product portfolios. So in some sense, the advisor has more to sell as well. So does that come in the way somewhere that you are educating but not selling everything?
No, see,
what other people are?
No, I'm equipping him.
Okay.
I'm just equipping his
knowledge.
knowledge.
You could still sell mutual funds from somebody else?
He can sell mutual funds from somebody else. What is my objective as a life insurance company? वो मेरा product बेचता रहे.
Which means
मेरा product बेचने के लिए मुझे उसको other industries की knowledge देनी है.
If he feels more engaged with me because of the education I'm providing, my relationship with him is stable. Now he can do whatever else.
Yes. So that is second part. Third part is, and this became really important in COVID times, is how am I enabling this person to sell my product better?
Sure.
Because insurance, it's a product which has a lot of documentation involved. There are, if your sum assured is large, probably you will have to do a medicals. There are a lot of things that you need to do. How do I make it seamless for the distributor? How do I make it? So we have used a lot of technology in this.
Right.
So proposal form filling when a customer is applying is completely online.
Right.
Then the medical center appointment and everything is at all point of time. I, as an insurer, have to keep both customer as well as the advisor informed. कि आपके customer का appointment है. So this customer, if the customer is important, this advisor will go with the customer.
Right.
Then as the policy is progressing, informing the customer that, informing the advisor, very important, of the stages is happening, and ensuring a seamless issuer. That is one part. The other part is, which comes right before selling, is equipping this person to sell. This industry has sold face to face for 90 years.
Right.
90 years. How do I sell? I'll come to you, I'll sit with you, explain the product to you. March 2020. this face-to-face meeting
In the Zoom.
out of the window. You are not allowed to meet the customers, right? And incidentally, March is the biggest month for life insurance
Yeah,
industry.
I can
And
imagine.
life
The
insurance
last
industry
2 weeks
lost.
were like gone, right?
Last 20th March का तो business ही नहीं हुआ, सारा
correct.
business तो March के last week में होता है, अच्छा है ना?
Exactly.
So it was actually yes, it was a setback for the industry, but more setback was people were not allowed to meet.
Yeah.
If I'm not allowed to meet, but that is the only way I know how to sell as an advisor.
So
We as an organization, and I should not take the credit alone, the entire industry actually worked overnight to create modules that will allow the distributor to sell online.
Okay.
Equip the more important, we can create modules, but more important was
these are also
training
people who are
this,
not used
telling
to a
them,
digital first
and
kind of
holding
approach,
them
right?
ki, no, it is possible.
Mhm.
It is possible. It is possible.
Fair
So
enough.
that thing, and they are looking for companies which are fast thinking, they are able to do that. Thankfully, we were able to do it fairly quickly.
Right.
And in the month, financial year 21, which is April 20 to March 21, we were the only life insurance company out of all the 23 at that point of time, which grew every month. Every other
Okay.
life insurance company grew in one of the other months. We grew every month.
So in
A
some
lot
sense,
of credit is we were able to
the execution.
equip our distributors on time, train them that this is how you can sell online. So they are looking for companies which actually do this. And last point is, are the companies officials, including top management, are accessible to them?
Okay.
So we ensure, I'm part of the leadership group of the company, we ensure we are always accessible to our distributors, always.
Fair enough.
When we go and meet them, whenever I am traveling or any of my colleagues are traveling, we make it a point to meet our top distributors in that city. We make it a point to have lunch with them. It is making them feel important, making them feel human, making them feel wanted in the organization. Again, it's basic.
Of course.
It's basics of
The
relationship
classic
management.
traditional way of doing business,
It
but very
is.
powerful nonetheless.
Yes.
So in some sense, just the last bit around this whole distributor engagement, I'm assuming these people have apps on their devices, which they carry around, tablets and whatever, to fill up those form and profiles. Is there a lens on language, culture, whatever, to segment this audience better or understand or engage with this audience better?
We have currently just finished a distributor study where again it is on a mindset basis.
Right. Again, the psychographics.
Again, I go back to psychographics.
Of course,
because
that's a very interesting lens.
demographics पे नहीं होता. Demographics पे up to a certain level.
Sure.
So there are 3 types of distributors at a demographic level who work very well for the industry. As I was telling you, high attrition rate. For the people who stay back and who do well, there are 3 mainly. Number 1 are housewives.
Okay.
Huge. The kind amount of business and the quality of the business the housewives bring in. Amazing.
Fair enough.
Okay. Second is retired people.
Okay.
Retired people because people listen to them. They have experience behind them. Plus they have time with them.
Of course.
And these people also want to do things the right way, in a methodical way. So very good set for. And third is small business owners.
Okay.
Small business owners, including financial consultants and this thing. Although I'm not calling that small, but small business owners and people working in the financial industry. These people also, they work very well for us.
Sure.
So we try to focus on
this is sort of a persona-based mapping.
This is more demographic kind of a thing, depending upon where
you're still applying a very geographically agnostic, language agnostic lens to this.
Yes. So we try to focus on these 3. But even within these 3, we are trying to do now a kind of a psychographic segment. So are they seeking respect? Are they seeking status? Are they seeking stability? Basis that we will create.
What kind of communication goes out?
So what kind of...
Awesome. Sounds fairly fascinating. I think, this has been a very interesting conversation from the lens of understanding business, because technology is a support infrastructure, not the driver of how things should be done. Thank you so much for doing this, Abhishek. Exciting conversation. Love completely your insights, and I'm pretty certain we'll leverage a lot of them in our conversation subsequently.
Thank you so much, Ankur. I really loved having this discussion. It has actually given me a lot of food for thought of what things we need to do. Yes.